While Buffett is celebrated for his sage investment advice and remarkable success, some of his tips and strategies have sparked debate among investors and financial experts. Today, we're exploring 20 of these more contentious or unconventional aspects of Buffett's financial wisdom. Tip 1. Delayed embrace of technology stocks. For many years, Buffett avoided technology stocks, citing a lack of understanding. This conservative approach, especially during the tech boom, was controversial among investors who saw immense growth potential in the sector. And holding cash in bull markets. Buffett's strategy of holding significant amounts of cash or cash equivalents even in bullish markets has been a topic of debate. Critics argue that this approach misses out on potential market gains, especially during periods of inflation. The long-term investment philosophy. Buffett is known for his long-term investment approach, favoring holding over frequent trading. This goes against the grain of many modern investors and day traders who advocate for active trading to capitalize on market volatility. Strong criticism of cryptocurrencies. Buffett's criticism of cryptocurrencies as non-productive assets starkly contrasts with the enthusiasm shown by many investors, especially younger ones, towards this new asset class. Ignoring macroeconomic trends. Buffett generally discounts macroeconomic forecasts in his investment decisions, focusing instead on individual company performance. This approach is often seen as impractical by investors who consider macroeconomic trends crucial in decision-making. Critique of Wall Street's short-termism. His critique of Wall Street's obsession with short-term results and quarterly earnings reports goes against the typical functioning of the stock market, where short-term gains are often prioritized. Limited diversification in investments. Buffett has sometimes downplayed the importance of diversification, suggesting instead that investors should concentrate on a few stocks that they understand well. This contradicts the conventional wisdom of diversifying to minimize risk. Tip: initial skepticism of internet companies. During the dot-com boom, Buffett was hesitant to invest in internet companies, a stance that was controversial given the rapid growth and influence of these companies at the time. The dismissal of gold as an investment. Buffett's reluctance to invest in gold, which he considers an unproductive asset, contrasts with many investors who view gold as a safe haven or hedge against market volatility and inflation. Disregard for technical analysis. While many traders use technical analysis as a key tool, Buffett's investment decisions are primarily based on a company's fundamentals. This approach is often seen as too simplistic or outdated by those who rely on technical indicators. Focus on intrinsic value. Buffett's emphasis on the intrinsic value of a company, rather than short-term market trends or stock prices, is sometimes viewed as conservative or out of touch with the fast-paced nature of modern markets. Selection of popular market theories. He has been openly critical of popular market theories like the efficient market hypothesis, preferring practical experience and personal judgment over theoretical models, which some market experts find too dismissive of academic research. Unique approach to philanthropy. Buffett's approach to philanthropy, particularly his commitment to give away the majority of his wealth to charity, has sparked discussions about wealth accumulation, distribution, and the responsibilities of the ultra-wealthy. Investing in simple business models. He often chooses to invest in companies with straightforward, easy-to-understand business models. This preference has been questioned by those who believe more complex, tech-driven businesses represent the future of investing. Entry into high-tech investments. His initial avoidance of high-tech investments, until more recent years, was a point of controversy, especially given the sector's significant global economic impact and growth potential. Supporting share buybacks. Buffett's endorsement of share buybacks as a method for companies to return value to shareholders has been debated. Critics argue that buybacks can inflate stock prices in the short term without contributing to long-term company growth. And cautions against leverage and debt. His warnings about the dangers of using leverage and debt in investing contrast with some investment strategies that involve calculated risks with borrowed capital for potentially higher returns. Faith in the American economy. Buffett's unwavering belief in the resilience and long-term growth of the American economy, regardless of its ups and downs, has been a point of contention among global investors who advocate for a more diversified international investment approach. Buell's skepticism towards ESG investing. His somewhat skeptical view of environmental, social, and governance investing, focusing more on business performance and intrinsic value, has been controversial in an era where ESG factors are increasingly considered crucial in investment decisions. Tip 20. Deliberate approach to succession planning. Buffett's methodical and somewhat secretive approach to succession planning at Berkshire Hathaway has raised concerns and speculation among investors about the future leadership and direction of the company. Warren Buffett, a titan of the investment world, has certainly shaped and influenced how many think about money and investing. However, some of his philosophies and practices have sparked debate, reminding us that even the most successful strategies can be viewed through different lenses. In the realm of personal finance and investment, it's vital to find a path that aligns with your own goals, values, and risk tolerance.